Hello everybody, and welcome to another video on SoFi. So SoFi reported earnings this morning, and it's had an amazing full year 2022. And that's why I titled the video 200 miles wins, because when the wind is blowing at 200 miles an hour, there's nothing you can do. You can't resist it. And I think this characterizes what's happening to SoFi. The market keeps hating SoFi and SoFi's advantage and denying. The market keeps denying SoFi's advantage. And that's why you see 11% short interest, which is very high, the highest that you'd find in most bank stocks, which is why you see the whole year of 2022 has been characterized by SoFi beating earnings and the market dragging back down. Beats earning, markets drag back down. Beats earning, markets drag back down. Beats earning today, and market will likely drag it back down. That is because the market is ignoring the mega trend behind SoFi. SoFi has flawless execution. There's things it can't control, but it has had flawless execution because it is in the right place at the right time and it has the right business. It's at the heart of the mega trend. Ask yourself, when you look at SoFi, who is likely to rule consumer banking in 10 years? Who is likely to rule that? Well, I have a thesis. I believe for Latin America, it will likely be Nubank who will be a ruler, a major player at least, of banking, of retail banking for consumers, consumer banking. I believe in the US, this market may likely be split. There will be many players, but two of the main players could be SoFi for the more sophisticated consumer that has a lot of needs in investments, credit cards, mortgages, loans, college educated. I think SoFi will have the lead in that space, and I think Cash App will have the lead for the consumer that's less sophisticated, that's just getting started out in life, or just getting started in banking, or that's the first person to access banking in their family. I think that Cash App is going to be that segment, and SoFi, and that's why I invest in all three of these stocks. And I've made a whole series about the reasons why fintechs will win. I believe they will win. No investment advice, this is just my humble opinion here. Okay, before I get started though, I just want to say one thing. This is not a story about student loans. I'm already seeing headlines about how, out of the amazing quarter that SoFi has had, this is what you have as a headline. This is what's reporting, right? Keep in mind, this is a whole video about Noto talking about the great quarter that SoFi has. And first question of a reporter is student loans. And he has to say, well, yeah, student loans have declined meaningfully because he has obviously a fiduciary duty, right? So yeah, they decline meaningfully. But SoFi is not a student loan story anymore. I remember a conference call ago, he was visibly annoyed that they were kept asking about student loans. And you can see he's visibly annoyed because student loans are never coming back to the extent that they were, and I don't think they're going to come back. It's going to be tied in courts for a decade, in my opinion. It's going to be another DACA. If you're familiar with what happened to DACA, it's still in the courts. This is going to stay in the courts, and so I think people need to stop. I mean, I'm happy to buy the stock at these levels. But when the market finally stops talking about student loans, which they eventually will, I think this stock will rebound. No investment advice. This is not a meaningful part of a business anymore. This is just one of the things that they do for student loans now. And I think they're going to have a really hard time coming back, especially as we're changing things at the Department of Education right now and how income repayment is gone. So this is not a student loan story. Now that I've put that out there, let's look at the year in review. So revenues are up 60% in a GAAP basis. And in a non-GAAP basis, which I would argue that's what I care about, non-GAAP, 52%. So we have 50% revenue growth, well above my threshold of 30% for stocks. I only look at stocks that grow at more than 30% a year. Well above. Stunning. Very happy about that. Now, look at all of the new products that it's introduced for its full year 2023. These are sophisticated products that most banks don't have yet. Yeah, some of the top banks are beginning to have things like pay in full for their credit card division, right? But they have it, right? Just like Affirm, just like Afterpay. They're agile. Options trading, right? Not a lot of companies have options trading. They do. Okay, SoFi Plus. See, that's a big deal. They've done so much. Feel free to stop the video and look at some of the products they offer and ask yourself, does your legacy bank that you have offer this type of product in a modern way, right? Not bulky software, not having to call someone, a modern way. And my guess is that they don't. Most people, in fact, when they have a traditional banking relationship with, say, Wells Fargo, they'll also have, I don't know, a TD Ameritrade or a Schwab account, because Wells Fargo doesn't do that correctly, right? And then they'll have another credit card with someone else. So SoFi doesn't do that. SoFi merges everything because it's an agile company. It's a very agile company that is able to release new products that fit the market really, really rapidly because of the way the company is built. So again, the mega trend here is disruption of consumer banking or retail banking. But the retail locations are going away. And if you look at a company like Chase, it has 5,000 branches in the US, right? Wells Fargo, almost 4,800 branches. And my assumption, my thesis, both in the series that I published a few days ago and in this video, is that branches are the past. Branches are not coming back. The future is mobile banking, right? We have our phones. Phones are the remote of our life, and we are all going to do modern banking in the future. So this is not needed, right? Cash is slowly but surely going away. This is not needed anymore. And I just want to show you the growth that SoFi has had in members. SoFi now has 5.2 million mobile banking customers, and it's been growing. You can see in the 2019s, 2020s, at nearly 100%. And right now we're in a recession, so it's not growing as fast. But I'll get to growth in a little bit quite slower now. They've been growing really, really fast. Now, I want you to look at banks. How do banks, how are they doing on mobile banking? Well, this data is a few years old, but nonetheless, they're growing at what? About 10% a year. And keep in mind, this is mostly education going through their branches, right? As customers go to the branch, these banks educate customers to use their app. But that's not meaningful growth. When you have Wells Fargo, for example, 22 to 24 million, maybe they have 25, 26 million today with a network of branches. I mean, think about the exponentiality of SoFi's growth compared to that. With 5 million customers, they've been growing very, very fast, and they keep growing. And can they grow at 50% a year for the next 5 years, right, or close to that? Then they will be giants. They will be giants in consumer banking with a number of consumers. Okay, let me move on. What else? SoFi is a story of exponentiality of revenue because of cross-selling. And you can see that these numbers are very high. These are the lending products offered, and these are the financial services product. These numbers grow really fast. Why? Because once SoFi has a customer under their belt, they can sell them more products and new products. So as SoFi introduces more products to their members, the members take on some of these products and add them up. So revenue at SoFi really grows two ways. It grows through adding more customers and then selling more stuff to customers because they're agile, because they're able to introduce really, really compelling product very, very fast, which is something that legacy banks can't do because of their structure. They have a very heavy structure and they can't do that. So let me move on. Another thing. SoFi, and this is forgotten often in the analysis, is SoFi has Galileo. So Galileo, the best way to look at it is could be an AWS of fintech. So they provide banking infrastructure for a lot of the main popular banks and trading apps that you see online that want to offer, say, a checking solution or say a credit card solution or a savings account. They power a lot of that stuff. So that's kind of like Amazon Web Services, who powers a bunch of websites for other people. This is an acquisition that they've completed recently, and I believe the market gives them no credit for that. No credit at all. Not credit whatsoever. But look at the growth, right? Adjusted net revenue, which is what we care about, right? Not GAAP. It's way up 50%. 50%, 2022 over 2021. EBITDA is way up. So this company has free cash flow, right? Let's look at the guidance now. So the guidance is 30%. Well, 25 to 30%. But they use this guidance. And I believe they're sandbagging the guidance a little bit. Like in my view, SoFi will have a better year than that. We know that SoFi has consistently beat its guidance over the past few quarters, and I think they'll have a better guidance, a better year than that, a better year 2023 than that. Even though 30%, by the way, is still above my threshold. So I love SoFi, but let me tell you why the guidance has to be conservative. Because we're in a recession now, even though it's not official. We've been in a recession for about 6 months now, and there's implicit demands from Wall Street when you're in a recession. And in other words, if Mr. Market could speak, this is Mr. Market, what he would say to SoFi, in my opinion. Mr. Market would say to SoFi, give conservative guidance. Give guidance that you're certain to beat. Because if you don't beat your guidance, you're going to be down 20%. Right? That's the story of 2022 for you. And I think we'll have that in early 2023. Right? What else would Mr. Market say? Oh, take it easy on innovation. Take it easy on offering great products because I want my GAAP profits now. I love GAAP profit. GAAP makes sense. This is what Mr. Market would say to SoFi. And because Mr. Market wants GAAP profits now, SoFi has to go easy on the hiring. They have to go easy on the new products because that costs money to develop that, and that hurts GAAP profit, right? Especially when you have to issue stock-based compensation to motivate best-in-class, best-in-world engineers who much prefer to have stock-based compensation. Anyways, advertising. Yeah, Mr. Market would say, oh, you have to cut that. Cut that. Ads are easy to cut. And that's why we've seen so many companies cut advertising. These are market pressures because of the recession and because of Wall Street. Because, and I'll say that, it is my opinion, based on my analysis of SoFi, that the law of large numbers does not slow down SoFi yet. They only have 5 million customers. They can grow those numbers by a lot. We have not reached a point where the law of large numbers slows them down, unlike a lot of companies. So this is why the guidance is low, in my opinion. And for proof, and I'll conclude of this, for proof of this is the pressure of Wall Street and SoFi, this is the proof. You have Anthony Noto guiding that SoFi will be GAAP profitable in the fourth quarter of 2023. So now the market can breathe. The market is happy. SoFi will be GAAP profitable. And the narrative around SoFi being a money-losing company, ignoring cash flow, right? That narrative can go away. And I believe that's what's happening. But Anthony Noto is delivering on Wall Street requests right now. I think this will be a temporary thing, and the company will get back to investing in its growth. But there are rational reasons for focusing on profitability right now, which is the stock needs to go up. Otherwise, it could be delisted, or you could need to do a reverse split, which would be awful because Wall Street always associates reverse splits with struggling companies. Another reason to do that is the morale of your employees and executives, right? Your executives and employees are starting to leave if the stock crashes too much. So that's why he's delivering for Wall Street to deter potential acquirers, which I think is the biggest threat of SoFi. If SoFi is acquired by one of the big banks, that could be a threat. And so the higher of a stock, of course, the less likely the takeover. But make no mistake, if macro had not changed to the level that it did, I believe that SoFi would still be pushing on all cylinders on innovation, and they would iterate much, much, much faster than they actually are doing right now. This is a slow pace for SoFi. This is a slow pace for SoFi because they have to cater to Wall Street. But over the long term, this thesis is as strong as ever. Macro has simply delayed the thesis of this fintech innovation stock, which really advances the productivity and the lives of all of the customers out there. It's delayed it, but macro has delayed so many innovation stocks. So this is not a new story. So I loved SoFi's quarter. Happy to buy the stock regularly. I'm a proud shareholder of SoFi. I can't wait until 2023 and onward. This is not investment advice. This is just entertainment, of course. I really appreciate if you can like and subscribe to my channel. Thank you so much for watching and have a wonderful day.